Well, good evening again, everyone. Welcome back to the channel. So I've been wanting to do this one for a while, but I'm actually going to share the coach's biggest stock wins of all time. So I've been starting to show a lot more. The portfolio that I show, the brokerage account, includes like the current holdings, including all the yield max funds are. But there's been a lot of winners that I regret probably selling too soon and not holding longer. Of course, like some people say, green is green. Being in the green is good, whether you're up, a little bit or a lot. So a lot of these throughout the years, I've sold like to cover, expenses and things like that. But a lot of times, the ones that I've sold, I would have been much better off holding for the long term. So let's go into the spreadsheet where I have tracked my biggest wins of all time. So here we go. Okay, so what you're going to see is a lot of numbers in front of you here, and we're going to break all of these down. So what you're going to see, the first one on the list, these aren't in order of biggest to smallest. These aren't in any particular order. You're going to see about, let's see, 27 different stocks that I've sold for a gain, basically. So the first one was United Airlines, 50 shares of that one, sold that one for a 25% gain. I have the actual, let me truncate this one here. Um, I have the amount of time that I sold or that I held it actually. And then I did the math if I held it to where I calculated it further. So this one got up to apparently a share price of 63.70, and this is outdated. I haven't looked at this one in a while. Maybe I could actually, you know what? Let's have some fun. Let's do this live. Let's see, UAL. Oh, this one crashed. I was calculating this one like at its all-time highs. So, hindsight is 2020. So we can calculate, hey, if we held this to, it got up to, almost $100 a share. So, I mean, I could sit here and say 96.70. You know what? Just for fun, let's say this was the top. So it was 96.70. I'm going to readjust this now. So look at that. I could have had six more $1,000 here. And then because I like to punish myself for, dumb decisions or decisions that I consider dumb, I would put a reason why I sold these when I did. The next one is Express Scripts. Express Scripts, this is one that hasn't been called Express Scripts in quite a while. It's under a different name, but I sold this before it actually changed its name. And then it got as high as actually, you know what, because it went, let me see. Because it went under a different name, I just left it. I just chalked this one up that I got it at its peak, or that I got all the meat off the bone, so to speak. So the reasons I gave, some of these I returned to my checking account. Some of these I paid for my first mortgage with. I paid my closing costs with. Some of these I used to buy other stocks. Some of these, like this one, paid off my car loan, paid some tuition for school back in the day. The third one was Green Mountain Coffee back when it was called that. Of course, this one went private. You're going to see this one on the list twice, actually. Let's see how much live participation we get on one of these here. We got all 0 of you on, so I'm talking to 0 of you. That's okay, though. Wanted to do this video for a while, so we're going to press forward. Okay, so the next one is, yeah, Green Mountain Coffee. This one I sold, and I actually remember this one. I sold because I was listening to Kramer or some idiot on CNBC, and they were talking about, well, this stock has hit its peak. We think it's hit its peak. And I want you all watching this to at least learn some lessons from me, learn from my mistakes. Um, Never listen to the talking heads in the media, because a lot of times they're way behind the curve. Follow what the institutional money's doing. If I can give any tips, follow that. Follow the buy and sells that are tracked, that you can research. But the talking heads in the media tend to know. To tend to be late to the party, and they tend to be wrong a lot of times. Nonetheless, this was a 30% gain. Only held this one for 3 months. This one could have been higher, obviously. Apparently, I used this one to buy Twitter stock. Excuse me. The fourth one on the list is Discover Financial Services, 50 shares of that. Paid 2,800, turned it into 37.66, $900 gain, 31% gain. This took 3 years though. Now this one is way higher. This one, since it's still publicly traded, I can actually track this one. I'm just going to update this one in real time. DFS, this one is up. This one's actually close to an all-time high. The all-time high was 128.22. So let's have fun and we'll just say all-time high. Let's see, 128.22. Now, back in the day, you'll notice how in this cell I calculated the fractional shares here because I used to reinvest the dividends I got in all these. Some of these paid dividends, like Discover Financial, pays like a 2.27% dividend yield. And then the next one is Travelers. Travelers, I had 25 shares of, paid 2,300, sold it for 3,200, $890 gain, 38% over 3 years. This is another one. If I had held it longer, would have been more, obviously. Let's see where we are now in Travelers. Oh, wow, $220 a share. This one is close to an all-time high, so it just hit an all-time high. So I think it had a good earnings or something. This is your classic like Warren Buffett company, insurance, of course. So I'm going to call this one at, let's see, 220.42. If I held this one till today, look at that one. See, sold too soon. Oh well. And then Pepsi. Now, the other mistake I could have made, I had a lot of these. So Pepsi, I never actually owned Coke stock, but I owned Pepsi stock. Pepsi stock, I had 25 shares of. And the way I used to pick stocks, I would pick like five-star funds on the S&P ratings back in the day, which has changed names several times. But I would do my research. I would pick good, solid companies with good, solid cash flow, a good moat, and things like that. All of these were good companies that I was in, I would say. So Pepsi, 25 shares, sold it at 28.28. $832 gain, 41.71%. Held this one for 2.5 years. This one I actually used to pay for a class that I dropped. I remember it well. I even say that in the comments, paid for a dropped course. So great use of money, right? And then I fought a little bit and got a partial refund. That's a long story, but anyway, not relevant to the video. Um, CVS, that's one that I held. I only sold like 5 shares of it. I can't even remember. I eventually sold the rest of it, but I haven't updated that. I got to update this more than I'm doing now. So let's see. Let me just check here and see. We got 2 of you on. Feel free to comment away if you have any questions or concerns about the coach's prior past investment performance, which, as they say, is not indicative of future investment performance. So anyway, the 5 shares of CVS here that I had, I bought for this price, sold for this price, 50% gain, 1.5 years. I also used this one to come up with money for closing costs. Bank of America, this one I definitely sold way too soon. Hold on a second. Let me look up. I was on Pepsi. I'm adjusting here. I like to have fun in the hypothetical situation here. What would this have been? So Pepsi was all the way up to 185.51 in 2022 of all years. So let's adjust this one upward, 185.55. And then CVS. CVS is now 75.19. So watch this one. This is going to be 5 shares times 75. We'll just say 75.20. How about that? Ooh. Oh, you know what? CVS is actually, it's either split or something. I'm not quite sure. Oh, it hit 106. Huh, I'm kind of confused here. Anyway, we'll leave that one alone. That was a 50% gain. Bank of America, I only had 10 shares. Should have had way more of this one because this one's done phenomenally since then, I think. Actually, no, that was the 40 something was the peak. So here's the interesting thing. Bank of America is one of the bank stocks that's actually never recovered from the 08, 09 crash. I got in at a cheap price, sold too soon, but didn't have much of it. Still made a 53% gain. Ticker symbol pizza, that was Papa John's. So I was in Papa John's for a few years. And I was also following the philosophy, invest in companies that I do a lot of business with. So at the time, I was getting a lot of Papa John's pizza. I was doing it like once a week. Anytime my local sports teams would win, whether it was like the Lightning, the Rays, or the Bucks, or even the Orlando Magic, those were you would get 50% off pizza. So I was doing a lot of those, and I made a great profit in the stock, although I didn't have that much. The mistake I made, if any, I probably bought too many stocks. And even though I made some nice gains, it wasn't a big dollar amount because I started out small, 30 shares of it, a $920 gain, um, 65%. Now this stock has gotten all the way to like 133. In fact, the 52-week, so this was in 133 was in 2021. So we'll say, what was it? 133.47, 133.47. So that's how much that could have been. That also paid for a course. So my work paid for a lot of my school, but I had to, some of them I had to drop. I had to eat the cost of that. This one here, the ticker symbol all is Allstate. I wasn't quite all in on Allstate because I only had 25 shares. $918 gain, 67.59%. Pretty good. Just like I said, I was spread out kind of too thin. After this, I started consolidating and buying a lot more of different stocks. I bought a lot more, so I have less stocks, more dollar amounts in. Like you all saw, I have a bigger amount in Tesla than I had starting out in any of these. I also have in my 401k, I have over 100,000 in one index fund in the 401k. So some of these, like you can see the gains, the average gains I have here in column F, which stands for fantastic in this case, the average return was 78%. That was my average return as an investor, 78%. So would you all say I was beating the market at the time? Well, over these years, so you have to divide that number by the time horizon, which some of these went for 1.5 years, some of these I held for 7 years. So you would have to kind of divide this by, you'd have to blend the average of years together. So it would be a complicated calculation. But to keep it simple, we would just say divided by 7. So my average return was like 11% per year in these funds. And this was just me doing it myself, managing my own stuff. So let's see here. We got one of you on, no comments. I thought this would do better. Oh well, that's okay. I'm gonna go through all of these. Like I said, this is a video I've personally wanted to do for a while. So let's see now. Okay. Allstate. Yeah, like I said. Oh yeah. Did I hold on? The highest price. This one also hit its all-time high. Another insurance company, 160.59. So 160.59, that's what this would have been if I just held on to it. Wendy's stock was another one I got in cheap, 120 shares. I think it split too. I made a 70, almost a 71% gain, but again, a dollar amount wasn't much because it didn't have much in it. Let's look at Wendy's stock again now. Um, let's see. Wendy's got as high as like 22.57. So I'll leave the 24.91 because that was like a price that it hit at some point. So I'll leave that one. That was close to its all-time high. And then check this. I use these proceeds here to fund my Roth IRA. And what did I do? I bought AT&T stock, which was not so great of a move. You can see some of these I paid off my car loan with. I used these for good purposes. Um, and then some of these I used to buy other stocks like Verizon and Blackstone. Verizon was paying a good dividend at the time, so was AT&T. Now the next one is Best Buy. I only had 5 shares of Best Buy, bought in, sold for a 74% gain. Let's see where Best Buy is now, actually. Best Buy, would it be a great buy now? This got all the way to 114.81. Let me see something here. I actually have it higher than that. Okay, so that's where that would have been. The next one is Aetna, another insurance stock. I was a big fan of the insurance stocks at the time, trying to be a Warren Buffett Jr. here. Let's see here. I think Aetna merged with somebody else. So this one, yeah, Aetna merged. So this one's going to be a hard one to track down. We'll just say we got all of this one. This was an 82% gain. The next one is one of my biggest gains of all time, and also one I should have held. This is Apple stock. So I had 70 shares of Apple. I was a beneficiary of one split on this stock. I doubled when you count dividends. I was up 93%, but I used this, well, technically I used it to pay my down payment on my house, my second mortgage. Um, but I'm claiming here in this column that I used it to buy Verizon and Blackstone. But anyway, here's the funny thing. If I had held this, this one's going to be a fun one. Let's see, Apple. If I had held this, we are at, I'll do the 52-week high because I like assuming in the retro, in the, what am I trying to say? Looking from present day, looking back, I'd like to assume perfect timing just for argument's sake. So we'll say 187.87. Watch this one. This is going to be fun. This is going to really make me upset, which is fun to do because you learn, right? How about this one? A $6,000 investment would have turned into $109,000. Oh, coach, why did you sell? Why did you sell? So see that? So that would have been better than, now some of these I churned because you're going to see down here at the bottom, I sold Blackstone, which I apparently used Apple proceeds to buy. Um, But God, look at that one. And then the next one is a repeat on here, a repeat offender, shall we say. This was Green Mountain Coffee, 50 shares again. I bought in. I doubled my money because somehow, and I didn't have any info on this, but the company announced they were going to go private, and then boom, the tender offer was like double the shares or double the price. So I doubled my money in a month. This was one of my biggest like quick wins that I ever had. And then I just took the cash there. Here's one you all are gonna laugh at me for, Starbucks. Now, Starbucks, I made 100% gain on. I had 30 shares. I was in this one. There was one split that I was in this one for. Held this one for 5.5 years. Had I held it until today, let's redo this one because Starbucks obviously has been a good stock to be in. This one hit, okay, 118.98. We'll leave it at that. How about this one? This is dumb, okay? I used the proceeds from this to buy Smile Direct, which went bankrupt. I should get a space helmet for that one. I would put it on, but I'm wearing a red hat that actually says "Make Finance Exciting Again." If you can't see it already, it doesn't say anything else. In case you all were wondering. And then UPro is one I trade in and out of. I actually have some UPro now, but this is when I first got it. I should have definitely held this one forever. I had 44 shares, and this one also split. So I sold this one for 117% gain. If I had held this one all the way through where we are today, after the split and stuff, we got to 76.28, which I want to say I'll just leave this alone. So this would have been like a $14,000 one. Used it to buy Blackstone also. Here's my Facebook stock. Facebook stock, believe it or not, was the first stock I ever bought. So pretty good. The first stock I ever bought, I made 158% gain on. You see, I held this one for 3.8 years, sold it way too soon, obviously. Of course, now it's Meta. I'm actually going to update this and call it Meta. It had not changed its ticker at this point. So let's look at Meta. This is one I'm going to kind of beat myself up over. The all-time high. So we're at 484.02 as of today. Watch this. And it has it split? Has Facebook stock ever split? Let me see. I can actually tell you. No, it hasn't. No, it hasn't because the price where it was, I remember. So this would have been where are we? Meta 400. This would have been a 10x if I had held it until today. But I guess I returned this to my checking account to cover some bills. Now Cisco is actually my biggest win stock wise. My biggest win of all time. I bought 200 shares of Cisco. This is one of my favorite companies. Great company. Um, this one, $4,000, I 3x'd essentially, turned it into almost 13,000. This is the profit. I was in it 5.2 years. If I had held it till today, now this one has not really taken off a lot. This one's still at 48.20, so that's where I would have been. It apparently got to 15. So I got most of that one. I can't knock myself for that one. And then I got some dumb Chinese stocks there, which are in the tank now. So brilliant, right? 25 shares of Qualcomm. This is another one I definitely wish I would have held. I had a 75% gain, held it for 6.5 years. As of today, I want to say Qualcomm is, let's see, Qualcomm is, okay, close to where I had it there. CAEAX was a retail mutual fund I had when I worked for financial advisors. This one I made a 51% return on. Glad I got out of it. Could have gotten a little bit more because it got this high. Could have doubled my money, but oh well. Tiro Price was one I had 10 shares of. I doubled my money on it in 6.5 years. Let's see where Tiro is today, actually. Tiro Price. Okay, that one got all the way up to like 180, 196.70, actually. So let's do this just for fun. 196.70. So that would have been more money. I got into Avid. Now, this was a success, actually. I got into Avid and a company called Exalta Coding Systems. Avid was a 2x for me. So I need to update this because I sold Avid last year. That was a new one I got into that was a success. Walmart stock, another good solid blue chip stock. I made 108% gain in this one over 6.5 years. Let's see where Walmart is today. I don't think Walmart has ever split either. Let's see. WMT ticker symbol. Ooh, did Walmart split? Because I have a price of like 153. I'm not sure to be honest. But anyway, that's the hypothetical there. SeaWorld stock. I had some stock in SeaWorld, paid 578, sold for a 58% gain over 7 years. So of course, 7 years went under the bridge like time was standing still. Quote that song, huh? Let's see. That was a gain of this. That's where it could have been. American Express, one of my favorite companies. You all know my history with them. I've had in the credit card churning, I had two offers that were rejected by them. They sent me $100 to shut me up once, and then the second time they gave me a nice middle finger. So, needless to say, I don't do business with them anymore. But I did have their stock. I made a 66% gain over 7 years. Let's look at where they are now. And I gotta say, there's some sycophants on here. I don't know if that's the right word, sycophant, but there's some channels on here that absolutely just love American Express and plug them. It's honestly worse than the Yield Max stuff. I mean, they just plug it, which Yield Max I'm a part of too. So there's where I would have been at the current price, 218. This would have become like a 3x. Oracle stock was also one I regret selling. So Oracle, I did some options in Oracle as well. Oracle has hit an all-time high. It was 120.39 in June. 50 shares of this one, uh, paid less than 2,000, sold it for this, 86% gain over 7 years. Let's see though. We were at, let's see, 152 week high, 127.54. So again, we'll assume perfect timing. That would have been this instead of this, actually. Now, this one of my favorites, Blackstone stock. I had 300 shares of Blackstone stock. This one, there's a little bit of a story out of this one. I started doing covered calls in this one, and I got called out of it. So this was 136% gain over 6 years. I would have definitely held this one, but one lesson I learned, never, um, there's two things I'm going to tell you here. Okay, so this is a positive, and there's a positive and negative to this. Never hold your covered call positions into expiration date because they will get called away from you. Learned that the hard way on one of my best holdings. But that's not a bad thing because I still made a nice gain in it. My shares got called out at the strike price they were at. Had I held this one got all the way up to 120, so this would have been a way bigger gain. You see that one? And what I said here was wrong. I said about Square Stock, IBM, and SHYF, which I'm also out of now. I actually use this to pay my house down, believe it or not. So yeah, I use these proceeds to pay my mortgage. Anyway, so here is the bottom line here. 58,000 doubled, turned into 109,000. And then I tried to keep this trailing. So this would have been 266,000 if I just did, if I held it. What's this column here? If I subtract this from this, these would have been my extra gains if I held it. So see, the moral of the story is you want to never uh well okay, the moral of the story is to hold on to your winners because a lot of times the ones you're tempted to sell unless you absolutely need the money, which you can see I used these for good purposes. Some of them I rolled into other stocks, some of them I paid the house down, some of them I paid the car loan off. So I use them for good purposes. But the moral of the story, as you can see, my winners have been tremendously outperforming. Had I just held these, I'd probably have more money than what's in the brokerage account right now. So hopefully that will be a lesson to you all. and hopefully you all enjoyed that. Oh, I figured you would like this dissector. Yeah, this is how I started as an investor, actually. How do you identify these? Well, luckily, I would say I have a little bit of an advantage over the general public because I'm in possession of advanced financial forecasting equipment, such as the 8 ball, which helps me identify a lot of my best investments. Actually, I'm just kidding. I didn't have this at the time. How do you have them not expire? Well, so here's what happened. This is when I was new to the covered call strategy. So this was like 2 years ago, and I was just having this talk in Discord today with Hoffman and some of the others. Check out their gains, by the way. They are killing it when it comes to covered calls. So I was making like $1,000 a week off of my Blackstone shares. Um, and then I, like the myth, the guy that created his own wings and flew too close to the sun and the wings melted. That's kind of what happened to me. Well, it wasn't bad because I got called out and then I got the cash for my shares. But I would have rather held those shares longer. Um, but yeah, to answer your question, I don't know if you joined late, but I did address this earlier in the video. I was using S&P reports. I was looking at five-star funds, solid businesses, solid cash flow. It's very similar to the Seeking Alpha ratings now. Like when I did your portfolio review, you mentioned Seeking Alpha, and that's a pretty solid one that I'm actually starting to use now too. But that I don't know if I knew about their stock service at the time, but I was using back when E-Trade used to be really good, which is only a few years ago. I was using they had access. They gave you free access to S&P reports, Morningstar reports, so on and so forth. Stuff that usually that advisors get. So that's how I picked those. A lot of those, like I said, I wish I would have stayed in. They're good, solid companies. Um, Yeah, so as far as options, yeah, I should have rolled it. Probably should have closed it out. My plan, here's what happened. I remember the day like it was yesterday. Um, it got called away in the after hours. My plan was as soon as the market opened, I was actually gonna close the position. But what did I wake up to? I woke up to my options getting exercised, and I was like, "Oh shit, I got called out of my shares of stock. That's no fun." Well, like I said, I just decided to use it to pay the house down. But had I known better, I would have rolled it the day before. So doing covered calls, like I was looking at one today that I'll show you here, a little off topic, but yeah, we've gone for 30 minutes. Might as well keep going. Let me go back into E-Trade. One thing I do like about E-Trade is their platform when it comes to options trading. So let me share this screen over here because I'm actually being tempted after I talked with Hoffman and the others today. I'm tempted to look at doing some more covered calls on Blackstone again. So I opened up some leap options that I've had since then with the sole purpose of being able to execute covered calls on them. So this is what happens with these. Okay, I'm going to share an example here. This is really tempting. I can't say I won't do this, but if I do this, I'm going to be in trouble. All right, so Blackstone, right, which we were just talking about. This is what got me into trouble before. Watch this. So it's at 126.50 right now, which I swear this moved in the after hours because I just looked at this and it was like 126.33. So watch this one. If I was to sell to open 10 contracts of these, and I have no business doing this at all because I have no business being assigned anything related to this. But watch this. Okay, at a strike price of 127, I could make almost $1,000 in premium, and that's only 2 days to go. You see how tempting that is? That's $900 in proceeds for 2 days. If I roll it out though to like 130, which would be a safer bet, it's like nothing. You see, it's like 154. If I go to 128, it's 554. But here's the thing: this could move 50 cents easily in a day. Now, if I go out a week, then I would have a little bit of safety if I was to go out because you're looking at time value at this point. So I'd have my 900 bucks, but then I'd have to hope this expired out of the money. So that's kind of where I got myself into trouble before because I was, flying too close to the sun, so to speak. Um, here's the thing. Let me share the chart on Blackstone because the thing is, if you go that close, it could easily hit that price. Let's see here. We were looking at a company called Cameco Corp. I got to take notes because I'm actually thinking this could be a good buy. Cameco Corp could be a good buy on the list. A company I've never heard of today, until today. All right, so Blackstone, see here, now it's saying 126.32. Now, if we look at the last 5 days, we were just above literally, a few days ago, we were just above 127. We got as high as, let's see, so we were at 127 here. We dropped here. We came back. So, and then if you look as of today, you see how stressful this can get? Because if this was expiration date, look at this. If you got an hour to go, look, you're getting assigned. You're like 20 cents away from getting assigned here. You're in the money by 22 cents. So one day when I did this, I literally followed all day and couldn't take the stress of it. So I actually ended up rolling the position for a loss with 20 minutes to go because it kept going up and down like this. So it can be a very stressful strategy for sure. So that's why, like I said, I do these. They're risky and I probably have no business doing stuff like that. That's why I haven't touched that stock since then. Anyway, thank you all for tuning in. For the few of you that did, that is my biggest wins of all time. I'll keep sharing stuff with you all because I like to be transparent. I know this wasn't yield max, so I know some of you are disappointed to see that my biggest wins didn't come from yield max. Well, are you surprised? Who's had their biggest wins from yield max after all? Anyway, thanks for tuning in. Like, comment, and subscribe. I think I'm on a roll. I think I'm going to keep going, and we will see you all very soon. Take care. See you on the next one.